The State Bank of India's revenue likely grew in the third quarter with new bad loan formation. The key number to watch, that is the outlook from Bloomberg Intelligence. And joining us now is Senior Analyst for Asia Financial's Diksha Gera. Diksha, what can investors expect when India's largest lender reports results later today?
So I think SBI will report a pretty resilient set of numbers. I think the growth will be quite good, largely led by record recoveries that they've been seeing. I mean, bad loans, of course, have been rising, which is somewhat of a concern, and that's the number to watch out for, particularly because of the state the economy is in. I think the SR Steel recoveries obviously will give the profit a good bump up. One thing which is noteworthy for SBI in this quarter is that they had a pretty decent size of divergence from what RBI assessed their asset quality to be. And because of that, they're going to take another 46 billion rupees of provisions that they are likely to take in this quarter.
You know, Diksha, it's Kathleen Hayes in New York. Poor asset quality on top of an economy that has gone into such a slowdown. It's expected a decade low of 5% in the second now, and the second quarter expected at 4.5%. This is a tough time for the banks.
Yeah, it sure is actually. So if you see credit growth has been slowing, so that is a challenge. And more so if you see slippages continue to remain high, that's the new bad loans formation. For all the banks that have reported so far, that remains high, which is a cause of concern because the banking sector is just coming out of a massive asset quality cleanup. And another thing that is happening as a result is that the banks are pushing more for the retail loans or retail sector. And that poses risks of, over leveraging, especially on the unsecured loan side. That's not a very conducive situation to be in. So, yeah, there are definitely concerns arising.
Are there some banks, though, that are better positioned to deal with this than others?
Yeah, I think our view is that the private sector banks are likely to gain market share as a result, including SBI, which are purely because they have stronger balance sheets. The new managements at helm, they are likely to push with more focus. Whereas if you look at the public sector banks, they have been a lot more busy with the whole mergers that have been announced last year. And also capital adequacy is a concern. So they aren't really able to raise or provide or give out loans as aggressively as the private lenders are. And also the other interesting fact is that deposits, which has always been the forte of the public sector lenders, the private sector banks are gaining market share even in that. So definitely we think they are better positioned to benefit from this.
Diksha Gera, thank you so very much joining us from Singapore, from Bloomberg Intelligence.